Now, gentlemen, so today we're going to look at what we call lecture number 22, internal controls over cash and the bank. Internal controls over cash and bank. And I started, first of all, by reminding you, where are we in the syllabus? And then, of course, I'll be able to give you, like, what do we do in practical audit? For those of you who do not know me, my name is Dr. Joshua Aura. I run, of course, I'm the principal at RCM College, and then I run an audit firm by the name Aura and Co., which is a registered audit firm in Kenya here under ISPAC. And of course, we are based at Westlands, Havenscourt. So whatever I'm discussing here is really, really practical. It's not something that is theoretical. This is what we do in the industry. So and I was trying to explain to you the process, the syllabus. That process is what you call the syllabus. But of course, in this case here in practice, it is what we practically do every day. Now, ladies and gentlemen, if I'm given today, for example, to audit a big organization like Nike, yeah, so they appoint me. Of course, there is what we call the professional etiquette, those preambles, like I can't take a job, an audit job at Nike without informing the outgoing auditors. We are professionals. These are Aura and Co. and, for example, PwC. All of us in this case here, we have a license from the same organization. So we are professionals. We must speak to each other. I would want to ask them, why are you leaving this organization? Of course, I must get permission from the client to speak to the outgoing auditors. So if the outgoing auditors, for example, tell me that, you know what, we have not been paid. So before I accept this job, it will be my duty to protect my colleague. Yeah, I have to ensure that this colleague is paid. If they tell me that we have discovered that these people are engaging in, say, money laundering, then I should be able to decline that appointment. Because there is no audit firm, ladies and gentlemen, that leaves a good organization. Not unless it is those compulsory rotations, etc. There must be a reason. And as an incoming auditor, it will be very, very important for me to know the reason why this person is leaving. So that is out. That I discussed in lecture 1 and lecture 2. Now we are in lecture number 22. All right. So then, ladies and gentlemen, I explained, and I'll always give you this analogy that an audit is just like any other project. If today you wanted to construct a house, a beautiful house, what do you do? First of all, bring on board the professionals. You'll bring on board the architect. You'll bring on board the QS. You'll bring on board who? For example, the structural engineer. So they do their drawings, their designs. Those designs are, of course, plans. So those plans, you take them to the county government for approval. Once they're approved, the next thing that you will do is to hire a contractor. So the contractor now is executing. So step number 1 of any project is to plan. Step number 2, in this case here, you execute. And then now step number 3, there is the concept of reporting. Now remember, when you hire a contractor, you must also hire an independent cow. Capital C, capital O, capital W, what we call the clerk of works. So the role of the clerk of works will be your eye on site. He'll be able to give you reports as per your arrangements. It will be on a weekly basis, etc. Yeah, so anytime you hear of any project, there will be planning, there will be number 2, execution, and then there will be number 3, the aspect of reporting. The same case with auditor assurance. And I gave you a company, in this case here, if I'm told today to audit Nike, then of course the preambles are done. The preambles are done, all right? So in this case here now, I will be able to sit down with my team and do planning. So under planning, we will be able to produce what we call an overall audit strategy. Under overall audit strategy, I'll be able to define what we call the net. So the net, in this case here, I'm looking at the nature of the audit procedures. Which audit procedures do I think will I be able to apply in these circumstances? And as I'll be teaching you later on, the audit procedures will be the A-A-E-O-U. A-A-E-O-U, I'm so sure that is quite familiar. A will be standing for analytical procedures. A will be inquiries and third-party confirmations. I must start thinking from the word go. Where am I going to get my evidence? Through inquiries. Who is the third party will I be able to talk with? Is it the receivables? Yeah, through what we call data circularization. I must think through. Yeah, so the net, the nature, extent, how deep will I go with my substantive, for example, tests? You know, the depth will basically be governed by how strong the internal control systems are. If the internal control systems are very weak, then I have to gather a lot of evidence. So I'll be able to go into depths. I'll be able to carry out my tests in a broad and a deep way. So the nature, extent. And then now T is the timing. When do I apply, in this case here, these procedures? Do we have an arrangement with this organization depending on the activities that I get to the site before the year ends? That means that I do what we call an interim audit, all right? Or should I wait for them to produce their financial statements at the end of the year, they approve them through the board, and then they give me these financial statements as our under call to audit them, all right? So in this case, I'm trying to look at the plan broadly. After that, now I'll be able to get into what we call the detailed audit plan. So we have, in this case here, overall audit strategy, and then we have the detailed audit plan. So the detailed audit plan now, this is where we look at the team. Which resources do we require to deploy down there? So the team we are looking at, who will be the engagement partner? Who will be able to accompany the engagement partner in this now engagement team? Yeah. Who will be able to do what? You know, it's detailed now. We get into specifics here. Under the detailed audit plan, we shall be able to get into specifics. After that, ladies and gentlemen, what we shall be able to do, of course, still under detailed audit plan, we must ask ourselves, do we need professionals? Yeah. I was telling you, for example, like currently we are auditing some hotel in Mombasa, which of course, apart from the restaurant, apart from the people staying in the hotel, it's a hotel, yeah, they have also this yacht business. �YACHT, it's called yacht. Yeah. So we are not experts. I mean, how do we even, for example, be able to ascertain that the value of a yacht is like, for example, 30 million? We will require an expert to come and assist us value. In this detailed audit plan, I must be able, ladies and gentlemen, to state that I need an expert. And many other things, as I've shown you in lessons 1 and lessons 2. Remember, we have done so many lectures. Now I'm in lecture number 22. All right. Now, ladies and gentlemen, after now you have planned, you go to execution. Execution has got 2 legs. Which legs are these? Tests of internal controls and substantive tests. Execution, when I start putting in my fingers into this company, yeah, when I'm now doing the real auditing. So I've got 2 steps there, 2 legs there. I have to start by testing internal control systems, and then now I do the substantive tests. Internal control systems, in a summary, these are those measures, those protective mechanisms that are put in place by who? By management. So if I'm auditing Sony, it is the management of Sony that is charged with the responsibility of instituting internal control systems. It's not the role of the auditor. My role as an auditor is to come and listen in terms of internal controls, is to come and listen to the management. I ask them, what are your internal control systems? Because I'm required as an auditor to understand. I'm not the one to develop them, but I must understand all of them. So number 1, I understand. Number 2, I document, because I must draw those flow charts. I'll be able to show you in practice how we draw them, the flow charts, or even just document them as narrations, what we call narratives. All right. After that, ladies and gentlemen, now we'll be able to test, or rather, we'll be able to check whether they were designed very well. So we test the design, and then lastly, we test their effectiveness. Are they effective? Now, ladies and gentlemen, I give you an example. I told you I'm the principal of RSEM. We have a physical college, right, in Nairobi here. In this physical college, at times you'll always get those students who don't like paying fees, who would want, in this case here, to play some hide and seek games. So they'll come and, just get into class. They don't care that there is a business to be run. So then how do we prevent that happening? Because if that happens in a big scale, we shall not be able to live. Our longevity will be affected. So then in that case here, what do? We'll be able to go out there, look for a very tall man, in uniform. We call them guards or soldiers. So that soldier, he will be a very, very good goalkeeper. He'll be a very, very good control system. Anytime a student comes and says, I would want to attend a class, they'll always ask for a receipt. Where is your receipt? So once they get this receipt, they vote. Vote is VOUCH. So vouching is tracing. Whenever you hear the word vouching, you trace a document to the original source documents, what we call source documents. So in this case here, this person will be able to vouch, see whether for sure this receipt was produced by RCM system. Yeah, of course, he must be having a master file, so he vouches. I'm introducing a very important word here that we'll be using throughout. Vouching, tracing of whatever items that you have, in this case here to the source document. It's also known as inspection. Inspection. Ladies and gentlemen, this soldier, of course, is doing that. So then as an auditor, I will go to RCM. These people will be able to tell me that amongst the controls that we have is this of having a guard at the gate. Then what I will do, ladies and gentlemen, I've now been able to understand the system. I've been able to document this internal control of a soldier. So I need to come and strategically position myself where that soldier is not even seeing me through observations. I'm observing a person now in action. You know, there is a difference between inspection and observation. And observation, you are observing, you are seeing with your eyes a process or a person in action. All right. So I sit somewhere. It could be in a restaurant. I can, in this case here, for example, get logins of their CCTVs. Just relaxing there and seeing what is this exactly person doing. So assuming in this case here, this person is thorough, every student who comes, they're checking their receipts, etc., then I'll be able to say that control system is working. But what of this situation where we have this pretty young brown girl who marches through close by this particular soldier, just gives a smile for a receipt, smiles instead of producing a receipt, and then the soldier says, yes, madam. The madam gets into class. Control weakness. The control is not working. All right. All right. So I must be able to test the control for me to be able to know the extent of my substantive test. So in your syllabus, in this execution, we shall be able to look at how do we test internal control systems. And then, of course, what substantive tests shall we be doing? And then I will go to the reporting. So reporting, lastly, it will be the audit opinion, which we shall be able to give. Audit opinion is really way ahead of us. It is in my lesson number 45. I normally have these very, very short lessons, less than 30-minute session. And once you just listen to them, you pass your exams. It doesn't matter whether you're doing this intermediate level or advanced level, you just pass your exams. And then most importantly, and this is why I want all my students here to be going for advanced auditing and assurance. You know, it is only advanced auditing and assurance, or rather just auditing and assurance, which will make you understand the business processes very well. You know me, I teach all these CP and ACCA papers, but I tell you, the paper that has really assisted me to understand the business processes is audit and assurance. That is why whenever I go for these CEO interviews, of course I perform very well, but you know, this is Kenya. Like I did one for Kenya Airways. Of course, I never got it. That is why we are here today. But I'm happy because I'm also running a big entity called RCM. All right. I mean, whenever I go for these interviews, people wonder, how comes this person understands so many things? It's because I'm a process person. What taught me these processes? It is audit and assure. It's audit and assurance. And that is why I always, whenever it comes to specializations, tell my students here to go for audit and assurance. And then the other papers, you can do them later. It's allowed. Go and finish CPA, and then you come and do tax, for example. But audit and assurance is the base of these business processes. So then allow me to get into my today's discussion. Like the process today that I would want us to look at is this cash and bank, internal controls over cash and bank. Ladies and gentlemen, remember cash, when you are handling, for example, cash in your office, there are so many risks. You will need so many internal control systems to ensure that this money is not stolen. Because the biggest risk there is what here? This cash in the company could get, in this case, special visitors who will be able to come and take it away. All right. There is a risk, there is danger there of handling cash in the company. Another risk is that whatever cash that you have, say, for example, at the end of the day, could be easily misrepresented. So in terms of financial report, you may get people having, for example, cash of 30 million, but in the financial statements, they write what here, 50 million. All right. So then how do we handle this as auditors? What is the auditor's responsibility over internal controls on cash and bank balances? So you're saying here that cash is the most liquid. Cash is the most liquid and a very vulnerable asset in an organization, whether in the form of physical cash or bank balances. Given its susceptibility to theft and misappropriation, it is crucial to implement strong internal controls around the custody, authorization, and recording of cash transactions. This topic is quite a nice one. It focuses on safeguarding of cash rather than the operational processes like purchases or revenue. Already we have done this. It evaluates how to protect both physical and bank-held cash and how to ensure cash balance in financial statements reflects reality. Remember, I teach you how to construct matrix, and that's why nobody in this case here fails this audit easily, especially if you study with us. If you're asked about internal controls over cash or over PPE, you should always make this matrix. Yeah, columns. Write for us here the risk. What could go wrong with this cash? If you have a control objective, or other control, what will be the control objective? What are the control activities? And what is the audit procedure? The moment you understand this matrix, then you have understood everything, ladies and gentlemen. Look at this. So you are asking the first danger. Risk is danger. What could go wrong? That cash may be stolen, physical or bank. Then if we put in controls, what will be the control objective? I told you in your exam, an objective, you must always start with the word to ensure cash is safeguarded from theft. Then what is the control action here? You as the CFO, you've been hired as a CFO. How do you safeguard your money? Yeah, store physical cash in a locked safe. This is a control. Store physical cash in a locked safe. Lock and the key. Yeah, lock and the key. All right. Then you come now, the CFO's work ends here in column 3. Yeah, because CFO and of course the management, they're the ones who have the responsibility to put up these control systems in a company. Then now when I'm auditing, when they give me these books of accounts, and now they want me to come and verify. And now I'm in this execution stage as an auditor. All right. What do I do? Remember, my work basically is to collect evidence whether, for example, these internal control systems are working. So then I will be able to observe and inspect physical cash storage. Yeah, I'll be able to observe and inspect physical cash storage. Remember, ladies and gentlemen, whenever it comes to these audit procedures, you should always be thinking about what I called AAE-OU. AAE-OU. Analytical procedures for A. A is an inquiries, third-party confirmations. Yeah. We have in this case here inspection for I. We have observations. Then we have U, which stands for recalculation. There is a U there. So if you're writing, you can write there very fast AAE-OU. Yeah, the audit procedures. Yeah. A is analytical procedures. A is what we call an inquiry and third-party confirmations. I is inspection. O is observation. And then U is what we call recalculation. It shall be called recalculation and reperformance. Recalculation and reperformance. And I'll be able to show you from your past papers. Intermediate level, advanced level. Yeah, how these questions come. How these questions come. All right. So when it comes to cash, there's so much many things you can do in terms of audit procedures. Here I'm only saying observation because I know if it is cash for wages, this cash should be brought, for example, by a security firm to your organization. So there are men in action, all right? So I would want to use my eyes to observe. There are lots of documentations there. I would want in this case here to inspect those documents. Even the cash itself, remember when cash is stored? Yeah, in that room, for example, it's stashed 1,000 notes very well, 100 notes very well. You know, it's not an action, it's not moving. So when I go to use my eyes to see how that cash is stored, then that automatically is observation. A good student will be able, or rather that's inspection. A good student will be able to know the difference between observation and inspection. And we shall be able to come to that later. But for now, we are saying for purpose of knowing that this cash cannot be stolen, yeah, you as the CFO, you must ensure that this cash is under secured, lock and key. And then as an audit procedure, there will be observations there. There will be inspections there. Now, control activity, look at this one here for the bank, restrict bank access, yeah, and require dual signatories for payments. Remember, ladies and gentlemen, in this particular case, this is the chief finance officer who is saying that for the cash which is in the bank, it shall not be everybody who can just walk into a bank and withdraw money. We shall restrict bank access. Yeah, and in this case here, we shall have that any check will have at the bare minimum 2 signatories. We talk of dual signatory, but it can be even 3, even 4. The more the signatories, the better. Of course, there are also some disadvantages of having so many signatories, because when you want to make payments, you may get some funny characters who don't like signing things very, very fast, right? That's why we talk of dual signatories. That's a control you're putting in place. Then on the other side, now we think of the auditor, and that is why every organization should have an auditor. Don't work in this case here without an audit. The moment you start seeing your revenues going towards 1 million, even 2 million a year, let's get an audit, and I can tell you our services are very affordable, and yet, ladies and gentlemen, we offer lots of advice. Yeah, it's very hard to get, in this case here, an organization that works closely with auditors going under. Yeah, because we bring in lots of. So you have called us here to come and see whether your internal control systems are working. If you call me to come and see whether your internal control systems are working, then what do I do? Yeah, so for example, I would review payment vouchers for this and the bank mandates to confirm 2 authorized signatories. Yeah, yeah. So the payment vouchers, remember how the payment vouchers look like, Yeah, so in this case here, those documents that will accompany the invoices, right? That there is an invoice from a supplier we're supposed to pay. So this invoice, I will be able to attach a payment voucher. So payment voucher, who do we pay on top? How much? Dates, etc. And then down there we have signatories. Every signatory, when you sign an attached check, you must also sign this payment voucher. So then as an auditor, I would want to inspect this document. I would want, in this case here, to review. I'm seeing a payment which has been done in the bank statement. 10 million was paid. I must vouch. Go back to the original documents. Vouching means going back to the original documents to trace that amount. So when I'm tracing, I'll be able to ask myself, do we have double authorizations? Do we have at least 2 signatories for each payment? If in this case it's only one person signing, chances are you are at a big risk and you're going to lose. Remember, ladies and gentlemen, I always keep on telling you, in auditing, you should always assume what we call professional skepticism, that everybody is a thief. Yeah, everybody. Don't tell them it will be a professional, but always doubt everybody. Whenever you give an information, doubt everybody. Have a questioning mind. Yeah, you are asking yourself what could go wrong here. And as much as possible, you are avoiding a situation where one person has lots of power. If it's only one person who is signing these checks, ladies and gentlemen, then there is a high chances of misappropriation. People are not, we people, including myself, we are not very, very good. Yeah, if we can get, in this case here, free resources without working, the better for us. And that is why we recommend what we call SOD. There is no way you should do an exam without mentioning these as a very good internal control system, SOD. Segregation of what year? Duties. Have a task which can be split, being done by independent people. The more the people we have are getting involved in a process, the better. To aggregate is to put together. You're putting together many functions and have those functions being done by one person. That is wrong. Don't aggregate, please segregate. When you talk of two signatories, that's a very good way of ensuring that a transaction, a process is being seen by more than one person. SOD. Yeah, as we get along, you'll be able to get used to this audit language, which is really great, really great. Now, ladies and gentlemen, what is the other risk, or rather, what is the other risk, yes, which can affect us here? That this cash that we have is misstated. It has an error in the financial statements. So cash misstated in the financial statements. If we have a control, to ensure that this cash is recorded, or rather ensure recorded cash equals actual bank balances. Yeah, whatever in this case has been recorded as cash in the financial statement will be exactly equal to cash and the bank balances in the bank statement. That is the control objective. Then what are the control activities will you be able to put in place, you as the CFO, to ensure, ladies and gentlemen, that everything is casting, CAST, casting, and ensure that we perform regular bank reconciliations? There'll be a lot of countings to be done. There'll be a lot of reconciliations to be done. Then as an auditor, when you call me on the other side of the coin, what will I be able to do? Mine, remember, is very easy. Mine is to inspect. Mine is to observe. Mine is to do calculations. Mine is to recalculations. Mine is to perform. So in this case, I'll obtain and inspect sample bank reconciliation what year statements. Yeah, obtain and inspect sample bank reconciliation statements. You know, audit procedure, you can write anything, yeah? So long as you have an idea of audit and assurance, you can write anything. Like now, when you talk about bank reconciliation, as an auditor, I know I can decide to just get 1 month data because we always sample, and then I reperform myself. I will reperform a bank reconciliation for just 1 month because I'm testing a control. If this bank reconciliation for 1 month that I've done is proper, then I don't have to check the others. I will know that these people have got a strong internal control system. All right. So do we have any other thing that can go wrong? Let's talk about auditors' responsibilities over cash and bank controls. I already have discussed this. So an area, physical cash security. As an auditor, I will visit premises and observe whether cash is stored in a secure, locked location. Bank reconciliation, inspect monthly reconciliation reports and test whether unreconciling items are resolved promptly. One of the challenges we normally get, ladies and gentlemen, in terms of these reconciliations, you'll get a situation where the company is doing reconciliations, but whenever there are irreconcilable items, they are left open for so long. If they are left open for so long, then that is danger. Yeah, if they're not reconciling, and of course they're not able to work on the matter, to resolve that matter very quickly, there must be something that is being cooked. So what we normally do is to ask, when was this reconciliation done? They tell you it was done on 31st January. How comes in this case here up to March, the irreconcilable items of January, how comes those things have not been resolved? How comes they stand unresolved? When you realize they're taking too much time to close irreconcilable items, then that is a control weakness. That's a control weakness. That's a control weakness. Now, ladies and gentlemen, please come here. You're going on very well, and you're almost finishing. Oops, sorry. Yeah, we have in this case, ladies and gentlemen, a role of a dual authorization. Yeah, so the auditor's action is to select a sample of bank payments and verify that each was approved by 2 authorized signatories. All right. And basically, even in our management letters, ladies and gentlemen, like one that we did just the other day, yeah, you'll get like there are 4 signatories. Imagine when, for example, we are questioning some of those signatories, they will tell us that, you know what, me, so long as I get a check, I just sign. So we take time even to tell these people that, hey, don't just rubber stamp things. When you're taken up as a signatory, you have a bigger responsibility. In the future, the other directors of the firm will be able to say, hey, as we are not responsible for any payments that were done, whenever a check is brought on your table, you as a signatory, you have a bigger responsibility. And ensure that you are signing, your signature is on a check, which of course has been brought with a proper accompanying documents, and that this payment is authentic. At times we go to court and the things we get to hear in these commercial courts, whenever you are taken in as a signatory, know that you have a very, very big monkey on your back. One of the fine days, that is a responsibility that could take you to jail. And I can tell you, over 75% of signatories that we have been dealing with, they will tell you all the time, when you try, in this case, of course, in audit, remember in audit, I've got a 360 degrees access to evidence. So when I'm talking this, they'll tell you that, you ask them, are you aware of this check? No. Myself, even at RCM, whenever I sign a check, even in my case, I have a list of all the checks that I've signed. Their numbers, check number, vis-a-vis who have we paid. Because later on, I've been in this business for long, especially when you have got other directors, you'll be taken to court. You'll need evidence. So you'll be able to come and say, you know what, the checks that I signed are these ones. Any other check which is appearing there with my signature, that is a forged check. That was not on. So make it upon yourself to ensure that you are signing. And then, of course, your role as an auditor basically is to confirm whether these signatories are for sure, in this case, you're doing their work. Select a sample of bank payments and verify that each was approved by 2 or more authorized signatories. Accuracy in record keeping, confirm that the bank balance reported in the financial statements agrees with the reconciled bank balance. In terms of bank balance, ladies and gentlemen, we also go an extra mile. I can't trust directors. Even if they tell me that they've been reconciling their things, I don't trust them. If this bank balance is material, as AAA and core auditors, we shall always talk to the bank. We shall ask for your permission to talk to the bank. We write to the bank, of course, with your permission, and ask for your bank balance as at 31st December last year. Yeah, I will do that. Because even if you give me bank statement, you know, this is an internal document. As we shall be seeing later on, internal documents are not really as reliable as external documents. I would rather generate this document myself. I would rather generate this evidence myself by getting it externally. External sources are always more reliable. So in conclusion, whenever you hear about cash and bank balances, cash controls are simple but crucial. Theft, unauthorized access, and misstated balances are the main risks. Auditors must go beyond the design. They must evaluate the operating, those signs, signatures, operating effectiveness of the controls, e.g. prompt resolution of unreconciling items. Focus on physical security, authorization controls, and bank reconciliation accuracy. Bank reconciliation accuracy. So that marks the end of my lecture number 22. Yeah. So then, ladies and gentlemen, what we shall do, so now, welcome to now we are looking at lecture number 23, substantive testing and audit evidence. Now this is the real audit. Yeah, which is section C of your ACCA/CPA audit and assurance. But first of all, it will be very important for you to know where we are in this audit journey. let's revisit our big picture. So remember, we have our syllabus here, condensed syllabus that I normally condense for my teaching purposes. So we have audit framework. Remember, ladies and gentlemen, that as auditors, we don't operate in a vacuum. We operate within a framework of professionalism. You must be very, very professional. We operate within a framework called ISA, International Standards on Auditing. All right? So we have a framework of professionalism. We must be independent, ethics, this part of your syllabus. Then we go to planning the audit, where we shall be able to look at risk assessment, materiality, and audit strategy. These already I've done in your earlier lessons. If you aren't there, you need to get those videos and watch them. Then we have control testing, which is the topic that I've been able to finish. The last lecture we did, which is lecture 22, covered the last area of control testing, understanding and testing internal controls. Now we are getting into D, which is substantive testing, where I will be able to show you how do you gather audit evidence on the financial statement balances. And then reporting, E, issuing the audit opinion. So basically, we are now in section D, and section D is the most interesting section, where the auditor gathers audit evidence to verify the accuracy of figures in the financial statements. So remember, in this execution, the first leg is check internal control systems. Second leg is substantive tests. So substantive tests, now you've been given financial statements. Now you're looking at the numbers, vouching the numbers, trying to see whether the numbers in the financial statements, they have told you that the PPE is $100 million US. Is that figure really truthful? So I'm trying to dissect, I'm trying to do a lot. Now this is the real auditing. This is the real audit now. So it is what I call number surgery. So here you will be surgeons. It's quite a bad illustration, ladies and gentlemen, because some of us here could have gone through that scalpel, in some theater, very, very bad. But this is what I would want you to always envision yourself doing. When you are an auditor, you are nothing less than a surgeon. A surgeon. Because you're dissecting numbers. So it was what I call number surgery. This is where we roll up our sleeves, grab our audit scalpels, and dissect the financial figures to see if they are healthy or hiding any fraudulent cancerous tumors. And this is your scalpel, ladies and gentlemen. So you shall be going through each number, cutting the numbers. You're cutting those numbers using this scalpel to see where those numbers are really healthy. Are they accurate or they're not accurate? So this is our scalpel. And by there, I would want to get, in this case here, feedback. Up to here, are we really together, somebody? Up to here, are you able to follow what I'm talking about? Waiting for your response. Great. Then we are okay. Thank you so much. Great. So then what is substantive testing? Substantive testing, this refers to procedures performed by the auditor to detect errors, to detect material misstatements in financial statement, account balances, classes of transactions, and disclosures. So any test that you put in place to be able to test your numbers, to detect what we call material misstatements, those are errors, in financial statements, account balances, classes of transactions, and disclosures are what we call substantive testing. Remember, substantive means what? Here comes from the word substantial, doing a lot of work. The depth now will be what? Here will be very big. We shall be able to get into deeper and deeper as we do the excavations to defend the numbers, to see whether the directors were able to come up with the numbers nicely. So the purpose of this substantive testing, which is the major thing, the purpose, ladies and gentlemen, here is to do what now? Substantive testing will help us to confirm the truth and the fairness of reported amounts. Obtain reasonable assurance that there are no material misstatements. There are two types of substantive procedures. We have what we call the test of details. We will be able to check documents, records, and contracts line by line. Yeah. Test of details. Yeah. And then we have the substantive analytical procedures. Whenever you hear the word analytical procedures, simply remember you are analyzing things. And analytical procedures will be looking at the ratios. Yeah, so you compute like the gross profit margin, and then you see how those numbers are moving up. Are they in line with trends? So the substantive analytical procedures using ratios, trends, and comparisons to detect what we call anomalies. Note, even if controls are strong, substantive testing is always what here required. So in the substantive test, of course, if the controls are very strong, it will be narrower. The extent will be narrower. If the controls are very strong, the substantive testing will be narrower. But if the controls are weak, now we really do a lot of digging. What is audit evidence? Audit evidence is the information used by auditors to form a conclusion and support what we call audit opinion. Yeah, audit evidence, key qualities, we use this acronym of SRR. Ladies and gentlemen, remember, this audit evidence shall be sufficient and appropriate. Audit evidence shall be sufficient and appropriate. The audit evidence, I gather, shall be sufficient quantity-wise, yeah, and appropriate in terms of quality. Yeah, very, very important. And the SRR now means what? This SRR means sufficient, reliable, relevant. This reliable and relevant is what we call appropriate. Sufficient and appropriate, where appropriate is equal to reliable, relevant. So quality, meaning. So we have sufficient. Sufficient is quantity. Yeah, enough evidence to support conclusions. Yeah, the size, ladies and gentlemen, the size of the evidence you collect. Don't come and tell us that you have collected the evidence and really you have something very, very small. Then you have reliable, quality, trustworthiness, and the credibility of the evidence. Appropriateness, it must relate directly to what you are testing. Factors affecting sufficiency, the quantity of audit evidence. Risk of misstatement. If the risk of misstatement is very high, then you need lots of evidence. Collect larger sample sizes. Materiality. If the figures you have are highly material, then you need more audit effort and documentation. Reliability. If you need more reliable, or rather if you have more reliable evidence, if in this case here, ladies and gentlemen, reliability, look at this impact here, reliability, more reliable evidence, then less may be needed. Higher quality equals less quantity, Now, ladies and gentlemen, remember, if in this case here, the audit evidence that I get is of a high quality, for example, I'm getting evidence from external sources, all right? I've done my research. The directors are men and women of high integrity. So if they're giving me high quality evidence, then I don't have to do a lot of work. No, I'll just be able to rely on small samples. This will become handy because I'm going to take you through a real case study in auditing. Yeah, we are progressing very well. Audit evidence hierarchy in terms of reliability. Which one is more reliable? The auditor's own generated evidence is always the most reliable. Yeah, auditors generated. So the auditor has been able to do his own recalculations, or he has been able to use his own eyes to inspect. This is the highest evidence. Yeah, it has the highest reliability. If this evidence is external, like bank confirmations, supplier letters, it is high. It comes second after auditors generated. And then we have what I'm able to gather internally, client-generated, like internal reports and verbal explanations. These ones, I should not trust them very well. The reliability is low. The reliability is low. Anything that is client-generated, you're given by, you can't ask the client, how did you calculate your depreciation? Then they tell you, I use straight line. As I document this in my working papers, I know that this evidence is not very, very reliable because they can cheat me. And that is why I will tell them, no problem, give me property, plant, and equipment register. When they give me this PP, I'll ask them, give me your depreciation rate, give me your useful lives. And then I recalculate myself to generate my own evidence, because my own evidence is the most reliable. My own evidence is the most reliable. My own evidence is the most reliable. You're able to understand this very, very well. We go to the nature of the evidence here. So nature of evidence, is it written? If it's written and it's original, written, original, you get like a letter written from an external. If it's written, of course, it will be highly reliable. If it is written, for example, a logbook, but it's a photocopy. It's a photocopy. You'll accept, but it can't be as reliable as something that is originally here. If it's verbal, stroke oral, then it will be very weak in terms of reliability. So for you, as you go to audit, always be asking for original documents. Ask to see original documents, because original documents will be more reliable. So you ask to get original documents. As auditors, depending on the size of the client, nowadays we have our own photocopiers. Let us be the ones photocopying them. Give me this title deed. They go and get it from their bank. If they are doing bank custody, they give you, you see the original. So the original will always be the highest in terms of what your reliability. But when I ask for this logbook and then they bring me a copy, I will accept it, right? But I'll still have to do quite a lot, because it's not as reliable as the very original. And ladies and gentlemen, like myself, if it's verbal, I'm asking a director, for example, what did you do about this and this fraud? Then they explain to me. I will always tell them to put that on email. Whatever they have told me, put it on email, because anything that is written is reliable. When they put on email, what I will do, when we are finishing the audit, I'll ask them for a management representation. There's what we call management representation letter. All right? So when I ask them for management representation letter, all those emails they were writing to me, I'll be able to tell them to append. There's an appendix here. Supporting a management representation letter. I'll be able to show you how these letters work like. Now, ladies and gentlemen, please allow me, because now I only have 15 minutes. I only have 15 minutes. So a good auditor always aims for external, original, and written evidence whenever possible. A good auditor always aims for external, original, written evidence whenever possible. Relevance of audit evidence. Audit evidence must match what you are trying to test for it to be relevant. You can't use the wrong test for the wrong item. You can't use the wrong test for the wrong item. Examples, don't worry about this. Bank confirmation for bank balance. This is very relevant. You want in this case here to get the bank confirming to you. How much was in the bank? This is relevant. How about customer confirming that you have written a letter to your customers to confirm interest expense? I mean, this will be very, very awkward, because they don't have access to your interest, to your account to know how much interest you paid for your loan. So this one here will not be relevant. So whenever we talk about, ladies and gentlemen, relevance of audit evidence must match what you're trying to test. You can't use the wrong test for the wrong item. You can't use the wrong test for the wrong item. These will come in handy as you progress. Number 7, and I'm almost finishing, audit assertions. Ladies and gentlemen, to assert is to try to prove a point. You are asserting authority. You are stating things as if they are factual. So whenever you hear of management assertions, these are the management beliefs as they prepare the financial statements. So these managers would want us to believe what they're stating. They would want us to believe that, for example, the financial statements are accurate. The financial statements are what year? For example, they are complete. Yeah. For example, they have rights and obligations over whatever that is there. I'll be able to explain that. That's an assertion. And if you don't get this right, then you'll always have a problem with audit and assurance, both at the intermediate level and at the advanced level. Audit assertions, the goalposts of substantive testing. A good striker, especially if there are Arsenal strikers, a good striker must aim at the goalpost, or they will never score. A good auditor must aim at the correct assertion, or they will never get assurance. So assertions will be our audit objectives. They will be your goalposts. Don't miss this. Every substantive test must aim at a specific audit assertion. These are the targets of your audit evidence. So for account balances, e.g. assets, liabilities, we shall be using this acronym. For account balances, like assets, liabilities, equity, these are statement of financial position items. We shall be using this acronym. I call them mnemonic. They assist you to remember, memory, to memorize. Mnemonic. 𝑬𝒑𝒂𝒄𝒕. Every value can reflect properly. Every value can reflect properly. So whenever you hear of substantive tests of the statement of financial position, substantive tests of the balance sheet, always remember every value, 𝐸𝒑𝒂𝒄𝒕. Every value can reflect properly. Every value can reflect properly. So we have here, every value can reflect properly. Where E stands for existence, the assets, whatever, must be valued very well. C stands for completeness. R stands for what we call rights and obligations. And then lastly, how have they been presented in the financial statements, in this statement of financial position. Existence, ladies and gentlemen, yeah, the assets and liabilities exist at the reporting date. As an auditor, I must be able to test this assertion. Do they exist? So to see where they exist, for example, I may want to observe to see where they're existing and where they are working. I may want to observe, for example, your lorry is in action, moving. I may want to inspect documents, to use my eyes. So, ladies and gentlemen, remember, you will be forced here to always remember these memory verses. We call them mnemonics. They are very, very important. For the statement of financial position, I shall always be required to remember this one. Every value can reflect properly. So when you go to your workplace today, always remember this acronym. Every value can reflect properly. Yeah. So V is valuation. The statement of financial position items are recorded at their correct value, e.g. fair value or amortized cost. Then completeness. All assets and liabilities should be recorded, are included. So remember, like if you look at our pending bills, we have what we call pending bills in most of these countries. Yeah, you'll get most governments are not really seized over like what is their actual liability. Most governments. Why? Because that register is never complete. Even assets, especially national governments, you'll get national governments leaving out very many assets from their property, plant, and equipment register. So you're saying there is an assertion on the statement of financial position called valuation. We have, in this case, existence. Do they exist? Then we have what we call completeness. Ensure that those registers are complete. So all assets and liabilities that should be recorded are included. And then we have, you could be having a vehicle outside there, which is not yours. Yeah, so as an auditor, I must ensure that you have rights. You can only say you have rights if you have a logbook. So rights and obligations. The entity has rights to assets and obligations for liabilities. And then we have P for presentation. The items are properly classified, described, and disclosed in accordance with what here? With standards. Yeah. So, ladies and gentlemen, it will be really, really important for you to always know what these assertions stand for. It will be very, very important for you to know what these assertions stand for. You'll be able to allow me to show you something before I come back here. Yeah, I can pick this one from this lesson. Yeah. Yeah. Of course, the first session there is basically to just introduce you to this, but I'll be getting deeper into this. So like we have assertions for profit and loss items. Here we normally use the mnemonic for our memory, 𝐂𝐶𝐵. 𝐂𝐶𝐵 is only correct classes are posted. Only correct classes are posted. All right? So only correct classes are posted. So under this assertion, we have what we call occurrence. That you're telling us that we had revenue, that we were able to sell. So we must ask ourselves in the P&L, did this transaction really happen, or are you trying to create a fake sale for the sake of just improving your income statement so you can get a loan from a bank? Accuracy. Was this amount which happened here recorded correctly? Completeness. Are all relevant transactions included? In most cases, like completeness, depending on who we are giving these financial statements, if we are giving these financial statements to KRA, most of us in this case here would not have a complete sales daybook, a complete sales register. We'll want to understate our revenues and overstate our expense. No, in terms of auditing and assurance, we shall make, ladies and gentlemen, everything what here accurately recorded. Remember, even this thing of trying to run away from KRA is not worth it. Because if your business cannot be able to pay taxes very, very well, just know that you are not in business. That business of yours, ladies and gentlemen, I mean, it's just a jalopy vehicle that is wobbling. Nothing there. Otherwise, a good business should be able to generate cash flows that shall be able to pay all the stakeholders. Of course, I'm not saying that you go and start now paying. No, no, no. We know there is what we call tax, for example, evasion, which in this case is what here illegal. That's what I'm talking about. If you must evade taxes for you to survive, that company of yours will die. But tax avoidance, which is the legal way of minimizing your tax liabilities, that is okay. That we shall always do. That's why I told you that auditing and assurance is the only subject that will help you to understand the business. When you talk outside there, you'll be able to talk business language. That is why all my students, all my friends that I mentor, they do audit and assurance in the specializations. Then we have here presentation. Presentation. Ladies and gentlemen, what do we have here? Is it shown in the correct format and the classification? Yeah, so because at times you get a company making a purchase. So they purchase goods for resale. So they have purchased goods. But because they don't want their purchases to be very high, what do? Instead of recording that purchase in the purchases account correctly, they will go and debit this in a particular asset. So there is a misclassification. That is why presentation is very important. That is why presentation is very important. So we have what we call cutoff. Was it recorded in the correct what year, in the correct accounting period? So remember, ladies and gentlemen, you realize that somebody does an order. When they place an order like this on 31st December, nothing has happened. These goods have not been delivered. Not even an invoice has been brought on your door. And you would want that purchase to be recorded in 2024, for example. That is why as auditors, we must always do the cut-off. Is 2024 been cut off correctly from 2025 transactions? So this figure that has just been ordered on 31st of December, which will be delivered and of course will be invoiced in 2025, that should go to 2025. And normally cut-off is not really a problem in the statement of financial, it's a problem in the income statement, in the profit and loss, in the profit and loss. I can see all right, Stephen, we are overcoming. We are overcoming. We are overcoming. We can talk behind the tent, right? All right. Now, ladies and gentlemen, in this case here, we have this designing substantive procedures. When designing audit procedures, you shall use these 5-step logic, including practicing auditors. Always borrow this 5-step logic. So, and of course, we go with questions. Step number 1, what item are you auditing? Are you auditing a PPE? Then PPE is in the statement of financial position, right? Yeah. So then I will be able to know what am I really, which assertion am I testing? So what assertion are you testing? What evidence is needed? Where can you get this evidence from? How reliable and relevant is that evidence? Is that evidence? Examples of substantive procedures by assertions. For example, trade receivables. Yeah. These trade receivables I'm seeing on the financial statements, do they really exist? The substantive procedure, send customer confirmation letters through what we call customer circularization. Yeah. Check post-year end receipts. Yeah. Post-year end. Yeah. They're saying receivables of, say, 30 million. Yeah. You see, after the year end, this is when I'm doing auditing. If they had 30 million as receivables at the very year end, then in 2025 January, I expect some of those amounts to be paid. Yeah. So I'll be able to see account this and this, Joshua Ura, we had a receivable from him of 5 million, he paid in January. Then that will give me some assurance that the receivables total figure is correct. But when you are doing this audit, say for 2 months after the year end, and there is no receivable that is being received at all, then please audit query, red flag, audit query, red flag. Red flag, red flag, red flag, red flag, red flag. Ladies and gentlemen, we have in this case here inventory. Yeah. So inventory, I want to ask myself, remember, this is in the statement of financial position, right? Valuation. Yeah. Remember in inventory, we normally use what we call International Accounting Standard number 2. Yeah. To value. So International Accounting Standard number 2, we are told to value stocks either at cost or net realizable value, whichever is lower, whichever is lower, whichever is lower. So under valuation, the substantive procedure, I will recalculate myself the net realizable value. I would want to see whether this item, which cost us, for example, 50 bob, yeah, what is its net realizable value? I would want to get this net realizable value by getting it as per market. I'll simply go to the shelf. When I realize that this item is not moving, automatically, it means that there is a problem. Yeah. So then I will ask the management, how comes these items are not moving? Yeah. Then, of course, if they're not moving, it means that I cannot fetch the normal price. So it means that the net realizable value will be lower. You may be forced in this case here, for example, to start giving those crazy offers. Yeah. So then how much can we realize here? Check the cost. How much did it cost you? Remember, IS2 is all about cost. It is all about what your net realizable value. Yeah. And then, of course, in inventory, there will be stock take. I will be able to attend a stock count. As an auditor, remember, I'm not the one to do stock counting. No, stock counting will be done by the organization itself. But my role with my team, I must be there when you are counting your stock. And before I come there, you guys must give me the stock count instructions in advance for me to understand the exercise. During the audit, I will be there. Just in this case here, observing men in action. I will be inspecting the stock sheets. Once you're finished, I inspect. I just check. Yeah. And at times, in this case, here on a sample basis, I can go to a shelf. Against the stock sheet that I have, you are saying this shelf has got 30. So I just count myself. Remember, it's not mandatory, but, I'm there to confirm things. I'm telling you, substantive testing, you are like a surgeon. Remember how those surgeons are accurate. Even if you see in most of these hospitals people dying, surgeons try their best. How I wish even us as accountants would be just like 50% of what most of those surgeons do. Most of them are really, really good. So with our scalpel, now we are trying to check things, ladies and gentlemen, here. Yeah, because I must know what item am I testing against which assertion. And as an auditor, unless you prove me that you're good with that, I will never trust your work. I will never trust your work. I must know, even the people that are auditing RCM today, because I can't audit RCM, even if I run an audit company, because of independence, I must hire a different firm. So whenever they come and you have changed auditors, so they tell me, of course, they send at times people that I'm able to say this guy now, which is very unfortunate. He's not very, very experienced. I expect them to send very experienced people. So I'll ask them today, what are you guys checking? What are you auditing? They tell me PPE. So which assertion are you auditing this against? Then I'll know straight away that there's a problem. And that is why most of these audit firms, for example, ladies and gentlemen, I normally train, because we have this training for practicing auditors. We tell them, in this case, this is what you're supposed to be doing. Because your managing partners are normally very, very busy. It is just like telling me to train the 𝐴𝑠 and the core staff directly. I can't. I have a lot of work. I have RCM. I've got things to do outside there. So even then, what I do, I bring other experienced auditors to train my own people. So for those of you who are running auditing firms here, as much as, of course, as the managing partner, you are the one who is on top of things, you can't train your people very well. Remember, a prophet is never appreciated at home. Call us, and we shall be able to help you with that. All right? So attend stock take. And then, of course, at the end of the stock take, I will be able to sign the final stock sheets. Yeah, the stock report. I should be able to sign to confirm attendance. And if possible, I'll be able to give my own report, especially in the management letters. Then we have PPE. PPE, of course, most of these, ladies and gentlemen, items, they could be having them and they don't belong to them. Yeah, so check rights and valuations. So on rights and valuations, inspect assets, yeah. Review the invoices that were raised for you to pay for the asset. Test depreciation method by recalculating on a sample basis. Cash at bank, what am I testing? Does this money exist? And is this money reported correctly in the financial statements accuracy? Obtain direct bank confirmation and agree with the general ledger balance. Revenue, occurrence, and cut-off. Remember, revenue is an income statement item. So occurrence and cut-off, match sales invoices to dispatch notes, and year-end cut-off testing. I'll be able to explain this better in the subsequent lesson. Today, I just want us to look at the overall. Expenses, are they accurate? Vouch. Vouch means you are tracing your expenditure to the original documents, to the supporting documents. So vouch expenses to supporting invoices and contracts. So exams tips for this section D, substantive testing, ladies and gentlemen, always link the procedure to an assertion. Use reliable and relevant audit evidence. Use clear audit verbs. Don't just start saying things anyhowly. Inspect, confirm, recalculate, agree, review, cast, C-A-S-T. Avoid vague terms like check or just look at. No, those are vague. Practice writing procedures. This is a high mark area in the exam. Practicing writing procedures. So, ladies and gentlemen, the takeaway here, remember, key concept, substantive testing focuses on gathering evidence to verify the figures in the financial statements. Use your scalpel that I showed you up there to dissect those numbers to see whether they're truthful. Audit evidence is a 500, must be sufficient, reliable, and relevant. Assertions are the goalposts of any audit procedures. Design of audit tests, they must be logical, targeted. For you to score, you must target the ball to the goal, and clearly written, So, ladies and gentlemen, during the day, I'll be able to cover this lecture 24. So that is the end of my today's